This is a demonstration of problem 6A32A, accounting for inventory using the periodic inventory system, FIFO, Lifo, and weighted average, and comparing the three methods. Futuristic Electronic Center began October with 65 units of merchandise inventory that cost $82 each, and during October the store made the following three purchases, and the problem gives us the number of units that were purchased and their unit cost. Futuristic uses the periodic inventory system, and the physical count at October 31st indicates that 80 units of merchandise inventory are on hand, and this table shows the cost of goods available for sale. So we see the beginning inventory at 65 units at $82 each, and then this column shows us the total cost, and then each of the three additional purchases, their unit cost and total cost, and then we get a total number of units available for sale of 155, and we get total cost of goods available for sale of $13,640. Then the problem asks us in part 1 to determine the ending merchandise inventory and cost of goods sold amounts for the October financial statements using the Lifo, FIFO, and weighted average inventory costing methods. So first we're going to determine FIFO, ending merchandise inventory. So if you remember, FIFO means first in, first out. So our ending merchandise inventory is going to consist of our newest purchases. So to calculate FIFO, ending merchandise inventory, we're going to start with our latest purchase, which was 35 units at $96 each. And then we go to our next newest units, which was 30 at $90 each. And remember, we had 80 units in ending inventory, so we need 15 more units, and those will come from the next earliest purchases at, again, $90 each. And the spreadsheet has calculated for us, by multiplying the quantity times the unit cost, the total cost for each of these, and then has summed those amounts to give us the total ending merchandise inventory for FIFO of $7,410. Now when we subtract that amount from our cost of goods available for sale, we get cost of goods sold for FIFO of $6,230. Next, we're going to do the Lifo ending merchandise inventory. So remember, Lifo is last in, first out. So the ending merchandise inventory will consist of the items in our beginning inventory and our newest, our oldest purchases. So we start out with 65 units that were in beginning inventory at $82 each. And then we need 15 more units to have 80, and those are going to be at $90 each. So the spreadsheet has calculated the total cost for each of those purchases, and then the ending amount for Lifo merchandise inventory is $6,680, which we subtract from our cost of goods available for sale to get cost of goods sold for Lifo of $6,960. Now we're going to do the same thing for weighted average. The first thing you have to do using the weighted average method is to determine the weighted average cost per unit. So you take your total cost of goods available for sale and divide it by the number of units that were available for sale. So $13,640 divided by 155 units gives us $88 cost per unit. We know we had 80 units in ending inventory, and when we multiply that by the $88 per unit, we get weighted average ending inventory of $7,040, which when we subtract that from our cost of goods available for sale gives us cost of goods sold under weighted average of $6,600. In Part 2, it states that net sales revenue for October totaled $28,000, and the problem asks us to compare Futuristics' gross profit for October using each method. So in this table, I have the sales revenue, and we're going to calculate what gross profit would be using the cost of goods sold that we already calculated for FIFO, LIFO, and weighted average. Cost of goods sold under FIFO was $6,230. So when we subtract that, we get gross profit of $21,770. We calculated cost of goods sold under the LIFO method of $6,960, and that gives us gross profit of $21,040. And then our weighted average cost of goods sold was $6,600. So we subtract that, and that gives us our weighted average gross profit of $21,400. And we notice that FIFO gave us the highest gross profit, and LIFO gave us the lowest gross profit, and weighted average will always be between those two. The problem then asks us in 3, which method will result in the lowest income taxes for Futuristic and why. So we know that we had the lowest gross profit for under the LIFO method. So the lowest gross profit will also mean the lowest net income and the lowest taxable income. So we know that when our prices are rising, which they were, we can look at this and we can see that they were rising from $82 to $96, then LIFO will produce the lowest gross profit, and that would mean the lowest income taxes. And then it asks us which method will result in the highest net income for Futuristic and why. So FIFO will result in the highest net income because it has the highest gross profit, which would mean the highest net income. And the reason why is when inventory costs are rising, FIFO results in the lowest cost of goods sold, and then that makes for the highest gross profit. And as we said, weighted average will always fall between FIFO and LIFO since it's based on the weighted average cost of inventory during that period. And that is the conclusion of the demonstration for problem 6A 32A.